The one thing that I wonder is this year the official deficit is going to be about 1.6 trillion. We also know that there are many items like the war that are off budget deficit. For example, last year the official deficit was 1.4 trillion, but we know the national debt increased by 1.9 trillion. David, how does one finance that? Because if you look at these numbers and they go well into the next decade, where we're running trillion-dollar multiple deficits just between, if you take the official numbers, in 2 years, we will have added, by the end of this fiscal year ending in September, we will have added officially $3 trillion to the national debt. Now, how do they finance that? In other words, if we take the savings of the United States and central banks, is that going to be sufficient, or will we see the Fed back in the market monetizing debt?
I don't think there's any question that, first off, there's no way they can continue to run these deficits. Everybody talks about the fact that they're going to run $1.5 trillion deficits for as far as the eye can see, but it's just not possible. And ultimately what will happen is the Fed's going to have to monetize it. And when the Fed starts to monetize it, then the show's over because, of course, interest rates will have to go up. People will see the inflation for what we see it. I know you've been watching for it. The inflation is inevitable at this point. But the Fed diving back in the market in a big way to pick up the bill is going to send the ultimate signal, and interest rates are going to continue to go up. And next thing you know, we're all doing it Greece. But the fact is that once you get that sort of interest rate death spiral going, where interest rates beget more deficits, beget more debt, begets higher interest rates, well, the show's over at that point. So, the options of the U.S. government at this stage are very limited, and it's all leading in the same direction. It's just a question of what are they going to do between now and then to sort of stave it off. Historically, what a politician will do is they'll do what has worked in the past. And what has worked in the past has been to have the Chinese and our trading partners in the Middle East and elsewhere step in and use the money they earn from selling Americans goods and services, mainly goods, to recycle that back into treasuries and therefore keeping interest rates down and allowing the government to borrow and spend until the cows come home. Of course, those trade deficits are now much smaller, so therefore they have much less money available to buy treasuries at a time we're trying to sell an awful lot of treasuries, which is a long way of saying that they're going to have to do something to get the Chinese and the people from the Middle East to step up their buying of treasuries, and I think they're going to do that. I think they're going to put a lot of pressure on it. I think they're going to not just put pressure on it, I think they're going to cut a lot of deals. And I think we're going to see the Chinese coming back in the market for treasuries in a fairly big way. That's one way they can try to keep interest rates down and finance the deficits. There are others.
But if they do that and the Chinese come in, what about the impact on the dollar?
Well, for the fact that the Chinese are buying treasuries, that will help the lid on the dollar getting destroyed anytime real soon. I mean, again, it's all going in the same direction, which is for a much, much weaker dollar. But the Chinese using some of their reserves, and they have a lot of reserves, to purchase treasuries at this point would be a lot preferable, much more preferable than the Fed just outright monetizing them. So I think this is the angle. All of a sudden you've seen Geithner and the Obama administration start making nice with the Chinese, and the Chinese, who had been quite aggressive until recently, have all of a sudden started making nice noise back towards the U.S. So I think deals are being cut, and I think that they're going to do what they can to try to get foreign governments to buy our treasuries, even if it means that the foreign governments are going to create money on their side to come and buy it. It's a big shell game, basically.
This is, I think, if you look at it from a global perspective, I don't think it's in anybody's best interest to see the dollar crash right now. That wouldn't help China's economy.
Right.
It wouldn't help the European economy. So, David, is maybe what they're trying to do is really structure this in a way so that maybe there's an orderly decline in the dollar rather than, let's say, a dollar crash.
Absolutely. I mean, what you've got going on here is they've reached the point, I think, where they realize, and I think Greece was sort of a tipping point on this, is that, as Ben Franklin said, they're either going to hang together or they're going to hang apart. And so you're going to see a lot of behind-the-scenes deal-making now between the various sovereign nations. As these governments, they all have pretty much the same problem, and there's no way that the market can absorb. And forget what the U.S. government's going to pump out in the way of treasury bonds, but you've got all the nations in the world are in a very similar position. Britain is in horrible shape. So they're all going to be trying to sell a lot of paper to fund their deficits. And, who are they going to sell it to? They're certainly not going to sell it to buyers at the historic low rates that we're at now. I mean, interest rates are close to a 50-year low. they can't get away with that. I mean, it's just unless there is some serious, again, backroom dealing, if you want to call it that. But it's going to be survival of the whole sovereign, the liquidity of the entire global system, the government system at this point is it's shot. I mean, the fiat currency experiment could be coming to an end, and I think it's going to be coming to an end in our lifetime.
Now, I think ultimately that's the next major crisis that we face. If you were looking out, maybe in 2004 and 2005, when you saw the crazy things that were going with mortgage financing, no money down, no doc loans, you could see that eventually there was a financial crisis coming. I think, David, today as we survey the globe, we take a look at what this administration's doing and what previous administrations have done, where our debt levels are and what governments are pursuing, it seems to me inevitable that the next crisis is going to be a currency one.
Right. And I think the other aspect of this is that people have to recognize that there's only so much you can tax. And because the other side of the equation, of course, there's a couple sides. One is you can cut expenses. But governments don't tend to cut expenses unless they're forced to. And I think, again, before the end of this thing is over, they're probably going to be forced to it. But, that's not something they do lightly because it's hitting against their own self-interest. So what they can do is they can tax, of course. But where we're headed right now, I'm sure your listeners have heard the number that only, I think some 46% of Americans don't pay any taxes, any income taxes. But if you look at the number that actually pay almost no taxes or no taxes, it's the vast majority of Americans at this point are really getting what you might call a free ride. And the people who are paying a lot. And once they repeal the Bush tax cuts, once those are allowed to expire next year, or if they push it forward to this year, which I still suspect they'll try to do, then all of a sudden the people who are paying taxes are going to be paying a lot of taxes. I don't know how your listeners feel about working for the government from, let's say, January into August, that's where it's headed. So they can only do that so much. So one of the things that we expect to see happen before, again, I would say within the next couple of years, likely, is the introduction of a value-added tax in America.
They're already talking about it.
Yeah, we've been watching for that. I didn't think that the Obama administration would go there initially because of what happened to George Bush Sr. when he said, no new taxes, read my lips. And Obama will get painted with the same brush if he, in fact, does raise taxes on the middle class. But the value-added tax is a very sneaky tax because it's largely hidden in the cost of production and the cost of products. But it's also a very effective tax. So they could raise $1 trillion a year by instituting a value-added tax. So I think that's a certainty at this point.
Yeah, I agree with you. Well, listen, David, as we close, if our listeners would like to follow the work at Casey Research, you have a lot of publications, a lot of research and newsletters. How could they do so, please? Well, CaseyResearch.com is the best. Just go to CaseyResearch.com. And while they're there, they can sign up for Casey's Daily Dispatch, which comes out daily. It's free. It tends to have a wide variety of views. They're certainly welcome to sign up for that. But all of our services, we tend to focus on natural resources. That's been a very strong sector for us, and it's certainly worked out well. All right, David. Well, listen, I want to thank you for coming on the program, and all the best to you, sir, and have yourself a great day. Thank you. It's my pleasure.